The trap of targets. So many times when I discuss in the classes that what should be a good target, and when I get this question asked, I said that forget targets. There's no such thing as a target. So I just thought, why not spend some time, create a video, and let me explain why I say that target is a trap. So better to understand my logic with the help of an example, with the help of a chart. So here we are, some old chart of State Bank of India. And let's keep things very simple. Let's keep very simple from a point of view of a simple, basic, naive, amateurish, rookie trader who identifies this trend line breakout. It's a supply line which is connecting the highs. It was giving resistance to the stock. And now over here, it gives you what we like to call a big breakout. So he sees this breakout, and if he is a little more matured, then he would wait for the pullback and then go for the trade. Nevertheless, let's give it a hypothetical example. You decide to buy above this price with this as your stop loss, and let's give it some number. This can come close to that 630 mark. Okay, let's mark a 630. At 630, let's drop in a horizontal line at these highs, which is close to 630. And let's say 612 is the low. Let's give it a stop loss of 610. Let's give it a little bit of room. And we will drop another horizontal line at 610-ish. So that's your entry point. Okay. And that's your more or less a decent room you've given as the stop loss. A trade was identified based on the breakout. Someone could have traded the breakout, but in that case, the stop loss would have been a little wider. And so he or she decided, let's go for the pullback. This is clean, this is simple, classical, conventional, technical analysis. A decent entry point has been identified. A decent amount of room has been given for the stop loss. No problem. See, at this point, or should I say till this point, everything was in the hands of the trader, the analyst himself. He figured out that this stock is breaking out. He figured out that this stock is pulling back, and now he can expect that the stock will give me further upsides. Is that okay? He also knows what is my entry point, 630, what is my initial stop loss, 610. And so this part, this 20 points is essentially his risk. So if he buys one stock and if it goes wrong, 20 rupees loss. 5 stocks, 100 rupee loss. Is that okay? Now what is not okay? Does he or she knows at this point of time when he's entering at 630 that it will go as high as 700 in a matter of 3 days? That will it go above 760 in a matter of maybe 3 weeks? Honestly, do you think any trader who's trading based on this chart really knows so? Let's understand the difference. Knowing and wanting. If I'm with you and I'm with the trader and buying at 630, I of course want 700 in 3 days. Why 3 days? Why not 3 hours? Of course, I want 750 and 760 as soon as possible. That's the want. That's the desire part. All of us wants that. There's no exception. There's no difference. There has to be a difference. So number one, do you agree with me? Do you accept with me that at 630, none of us know how it will unfold? If you're with me that yes, I don't know how it will unfold, then what's the point of deciding a target? And why do people, especially media, talks about targets and targets? Because it makes you feel good. It makes you feel good that if you pass the exam, you'll get good grades and you go to a good college. If you go to a good college, you'll get a good job. If you get a good job, you might marry a decent person, etc., etc. It's almost like a carrot in front of you. What if I told you this chart has given you a breakout, buy at 630, use a stop loss at 610, and I just stop. There's no target. But my neighbor tells you buy at 630, use a stop loss at 610 and use a 730 as the target. Then your mind will do the calculation. Oh, this looks good. 730. Wow. Subconsciously, you'll do the transaction. You'll do the you do the calculation that, okay, I'm taking a 20 rupee risk. I'm looking at a 100-point gain. That's a 1:5. Amazing trade. I should go for it. That's the carrot. That's the bait. The person who's telling you, that's also based on a chance and a probability. I'm making an assumption here that both of us are decently sorted characters, and we are taking trades based on what we see, what we understand, with a sensible, logic behind it. So at 6:30, honestly, I do not know it will go to 7:30 or not. So I might as well put my entire focus on my entry and what is happening after my entry. Let's say, in this case, it zooms up to 700 straight away. So I took a 20-point risk and I'm getting a 70-point return. Of course, it's good. If you have ever traded, you will be anxious. You'll be fearful. What if my profits go away? You will have greed. You want more. But what if it goes away? So there's a greed wanting you to see more upsides. There's a fear which will tell you, what if it comes down? Your profits are going to dissipate. And this is the big dilemma. This is the big, I don't know, sir, exit is so difficult. So please understand. Number one, target is a trap. Target is just your subconscious mind telling yourself, oh, this trade which I'm taking at 6:30 can give me 100 points. But at this point, you don't have any clarity about that 100 points. So, learning, do not fall for traps. Then what should I do? Focus on the trade. If it's giving you, how am I going to let it run but protect my profits? And what does it mean? You trail your stop losses, your SLs, trail them. If you do not want to trail, you're fine with 700, book out, big deal. What are you trading for? Money, right? Take the money off the table. For trailing stop losses, volatility-based stop loss management, ATR-based, something like a SuperTrend will do a nice thing. I just plotted SuperTrend over here, a 2-1 parameter. What's wrong with this? So you allow your trade, but you protect it. You slip from the top and you get out. Of course, every trade will not play out like this. Few trades will get stopped out. And that's exactly what trading is all about. So, coming back to the point, the trap of the targets. When you're focusing on the charts, when you're focusing on the prospective trade, 100% focus on your entry, your risk management, and when the trade is on, focus on the risk part. Let the return unfold. If the trade gives you a return which is good, which you really like it, you want it, take it. If you are stuck, no, I want to ride, but I'm scared, then use a trailing stop loss. Feed this trailing stop loss and don't look at it, every second, every tick. The lesser you look at it, the trade will feel better. Or else you're just, right on top of its shoulder, tracking it minute by minute, second by second. So that's my take on the targets and why I do not use the word target and do not use any targets for even the kind of analysis and trades that I do. Share your thoughts. What do you think about targets? Does it make you only feel good? Or it's just a word which is actually doesn't have any concrete importance in our, trading journey, in our method of trading? So do let me know. Thank you everyone for listening me. Trade well.